If you hold Tesla in your portfolio, you will know that it has been a pretty rough time recently. I know in my portfolio, I've seen my total returns go from like 30% to 5.5% in such a short space of time. But my portfolio is pretty concentrated, so I would expect big swings upwards and downwards depending on what the stocks in my portfolio are doing. And Tesla is the largest position in my portfolio. But I'm not too concerned. I'm not very emotional about this. I am just using this as an opportunity to buy more. Having said that though, I think it's really important for long-term investors to actually understand what is causing their stocks to drop, because it's that understanding and that knowledge that will then allow them to either be convicted and buy the opportunity, or maybe the stuff that's going on is actually concerning and they need to rethink their thesis and maybe even not invest into the company they're investing into. So we are going to discuss all of that in today's video. So we have seen Tesla stock go below $200 a share for the first time in quite a while. And on Monday, it actually closed at $197.36 per share. And that's a 32% fall from highs that were reached earlier this year. But Tesla is still up by 83% over the course of the last year. And that is absolutely phenomenal given the macroeconomic situation that has been this past year. But just before we get into that, I want to talk about the community that we're building over on Discord. There is a group of like-minded investors that talk every single day, and we talk about a range of different topics. We've got loads of channels on there, from Tesla to Palantir to other stocks to general investments. We've got channels on there dedicated to self-improvement, a book club, and now we've also got a Q&A section. You will also get access to Patreon exclusive posts. One of those that goes out every single week is a portfolio update. On top of that, you will get notified every single time I buy or sell any position. If you're interested, I'll leave a link in the description below. There are a few reasons as to why Tesla has been not performing too well as a stock recently. And that's important as a stock. Company and stock sometimes perform very differently to each other. One of the main ones, probably the most important one at the moment, is battery production, and then that links to EV demand. So let's talk about that one first. Panasonic revealed yesterday that they plan to reduce their battery EV production by 60% at some of its plants in Japan in order to normalize inventories. And that's pretty significant. 60% is a large number. And on the front of it, that's quite concerning, because then you start thinking, well, what's going on with EV demand? Is there now no demand? But let's dig into this a little bit more. It seems like, as normal with Tesla and the media, things are being blown out of proportion, because what's actually happening here is Panasonic are reducing their EV battery production by 60% at particular factories for particular Tesla models. It's not across the board. So the reason that they're doing this, that they're slowing down production, is because Tesla Model X and Model S vehicles have had a reduction in their sales. And those vehicles are equipped with Panasonic's battery cells that are actually imported from Japan. And this is not really surprising at all. These vehicles are Tesla's higher priced models. And in economic times of struggle, people aren't really buying those high ticketed items. They are not using their cash to buy brand new high priced vehicles. Instead, the demand's actually shifting. People are looking at how they can purchase cheaper vehicles like the Model Y and the Model 3, for example. And also, these two models don't actually qualify for the tax credits. So all of these factors combined do help explain why we would be seeing a slowdown in the sales of Model X and Model S vehicles. The good news here is that this Panasonic slowdown does not concern the North American battery factory that is operated by both Tesla and Panasonic. And it's this factory that produces the battery cells that are then used in the Model 3 and the Model Y vehicles, and some other products as well. And it's important because these are the models, these are the vehicles that are accounting for most of Tesla's sales. So I saw this post on X from Alex, which is quite interesting. It puts all of this into perspective a little bit. So he said, to summarize, Tesla shares fell 5% today because Panasonic said they cut some of the battery production for the Model S and the Model X, which account for 5% of Tesla's total volume in 2023. You can see on the graph that he shared that the Model X and the Model S are such a small amount of Tesla's total EV sales in Q3 in America. And that's kind of across the board. Most of the sales are coming from Model Y, which is the most popular EV, and Model 3, which with the new revamp, and that's now going out, which we'll talk about in just a minute, I only expect that to go up. Okay, so we had that news from Panasonic, and then just to add some more juice into the mixer, don't even know if that's a saying, it is now, we also heard that ON Semiconductors had a bad earnings. It was not good at all. They missed revenue guidelines and their profit fell significantly. And then following on from this, analysts came out and said that ON's Semiconductors guidance suggests that the company has finally succumbed to macro pressures such as softening demand for cars. Two things here. Firstly, I think it's really important to point out that vehicle demand and the business in general is a cyclical business. During times when interest rates are up and people are strapped for cash, people aren't spending money on cars and that area will go down. However, there will be a time that comes again when the economy flips and actually people do have a little bit more money and people are purchasing cars. And, you know, it's the same for EVs as well. It's going to be the same for both ICE vehicles and EVs. And then the second point is you're probably wondering why I'm talking about ON Semiconductor. Who are they and how do they relate to Tesla? Well, they make silicon carbide chips. And Tesla actually uses these silicon carbide chips in their EV powertrains. However, here's the important nugget of information here that you should know about. Tesla announced in Q1 that they would reduce their use of silicon carbide by 75% in their vehicles. And this was due to high costs and also high complexities. And this means that they can produce their cars easier, faster and cheaper, and then they can pass the cost savings on to the consumer. So actually, this news isn't really affecting Tesla all that much. But whenever a market slows down, whether it's the EV market or any other, investors are kind of left with this question and they're left debating whether the peak has been seen and actually the market will not be growing anymore and that's really it, or whether actually the slowdown is just a short-term cyclical issue and actually it will pick back up. And like I just said, I think in terms of the EV market, it is cyclical. We're going to see it pick back up. We're going to see the demand grow again. And actually right now, let's just think about the demand for a minute. I saw this picture. US EV sales in the first 6 months of 2023. Well, it's very clear that Tesla are not struggling compared to some of its peers. They are absolutely doing an insane job of EV sales compared to their competitors. And at the moment, it honestly seems like they're doing fine. They are okay. The news will always tell us that they are struggling and this and that, but just look into the information and just do the research and then make your own decision. But it does seem like right now, Tesla and then BYD are pretty much the only ones actually doing okay. And I think it's okay that BYD are a good competitor to Tesla. There is room for more than one EV manufacturer in this area. And I'm okay with BYD having some of the market share, absolutely. Tesla will continue to be really strong and will continue to put out new models like we're seeing Cybertruck Model 3 refresh, in the future maybe a really affordable vehicle. But they also have many other things going on outside of just their EV sales. And then when we leave the whole battery production and demand issue and start thinking, okay, what else might be causing Tesla stock to be going down? Well, like I kind of alluded to earlier, just the macroeconomic situation, it's been far from favorable. With the Fed's increasing interest rates at what seems to be the fastest pace that they ever have, fact check that, I'm not sure that's true, but it just seems to be constant interest rate hikes have been going on for however many months. This is making it harder for people. It's making it harder for people to get car loans. It's making it harder for people to be able to purchase vehicles. And like we've just been saying, this does have a knock-on effect to a cyclical business like the EV business and like the vehicle business in general. But we also have government incentives pushing people towards actually buying EVs. So when people come to get a new car, they need to get a new car, they're looking for a new car, whatever, they will be thinking, okay, what cars do I want? What EVs do I want? And they will research and they'll look around, and Tesla's one of the best options in my opinion in terms of what you're getting for your price. The EV range, which company has a supercharging network that you can rely on. And then moving on from that, we had the earnings We won't speak about the earnings much at all. I don't think they're really having an impact on the stock price right now. I think that time's been and gone. But what may be having a little bit of an impact is the Cybertruck timings. So Elon Musk said himself that they've dug their own grave with the Cybertruck. This vehicle is proving way more complex, and it's going to be a lot slower, take a lot more money, and just be a lot more difficult to actually ramp that into full production. And we were told on the call, don't expect that in the next year or so. It is not going to happen that fast. We do have the delivery date coming up, very, very exciting. Not even a month away now, but to actually fully ramp up full capacity production is going to take a few years from now. And I think that analysts and some people, some investors even, didn't think it would be quite that long. So maybe that's causing some sell-off too. But let's not be all doom and gloom. There has been some really, really positive, exciting Tesla news recently. Of course, when you look at Tesla stock on your screen and you're just seeing red and it just continues to drop every day, it's hard to think that actually the company is doing really wonderful things. It's not always visible in the stock price, but the company every single day is getting more valuable. So what have we had? Well, we've had Model 3 vehicles, the refreshed vehicles, arriving in Europe and in Dubai as well, I think. And they seem very, very popular. I don't think demand will be an issue with these vehicles at all. And then we had the news about BP. BP are one of, if not the largest oil companies in the entire world. And they are actually purchasing $100 million worth of Tesla superchargers. They'll be purchasing these by 2024, and they will then be deploying them at various BP Pulse locations. And this is really important because time and time again, we hear about new companies adopting the North American charging standard and joining Tesla's supercharging network. And we'll talk about a new one in just a minute. But this is different from that because this is actually a company purchasing Tesla's supercharging. So they're purchasing the hardware unit. They're not just joining the network and changing their plugs. They are physically purchasing the hardware off of Tesla. This is the first time this has ever happened. And why is this so important? Why am I excited? Well, to me, this signals a new revenue stream. And I only see this expanding in the future. And then we've got the news that Tesla has launched a new stealth grey colour for the Model S and the Model X vehicles. I think these are only in the US. I'll throw a picture up of one if I can find it on the screen now. Let me know, would you go for this colour or do you still like one of the other previous options? We've had some price increases in the US and China on some particular models. This is good because it signals that even in a struggling economy, Tesla are actually seeing opportunity to increase some of the prices of their vehicles, which means the demand must be there. But again, of course, we never hear about this. We only hear about them cutting prices because there is simply no demand. And then lastly, Subaru, I hope I'm saying that right. Subaru has been the latest company to announce that they are going towards the North American charging standard, and they will also be embracing Tesla's supercharging network. It just feels like we are continuously getting more and more of these every single day, and I don't really know what companies are left to actually make this switch. If you think of one, let me know in the comments below. Like I said, if you want to join the Patreon, I'll leave a link in the description below. Thank you so much for watching this video, and I'll see you in the next one very shortly.